This is Carrie Ann, your local favorite go-to realtor here in Northeast Florida, and today I have got Keith from Eight Flags Mortgage. Am I saying it right?
Eight Flags Home Loans.
Home loans. Okay, home loans. I want to make sure I got it right. So today we're going to talk about first-time home buyers, and we know what they should be doing, but let's talk about what they shouldn't be doing.
Thank you, Carrie Ann. First of all, thank you for having me here.
Sure.
And yeah, this is something that folks don't really think about, and
Yeah.
and it's important. Some of the stuff is real obvious as far as what they should do. Yeah, you want to save money and you want to pay your bills on
Right.
time. Those are things.
Right.
But the number one thing that they should not do, in my opinion, is resist going out and buying that fancy car.
Amen.
Oh my gosh.
Amen.
Oh my gosh, I could tell you so many stories where a young couple or just an individual, I'll pull their credit and all of a sudden I'm seeing a $600 car payment, a
Right.
$700 car payment. And the truth of the matter is, it's a lot harder to get a house when you have a car payment like that, as opposed to if you're getting the house first and then you go to get that type of car. You're better off getting the house before you get the car.
Okay.
Debt to income is really important right
Right.
now,
Yeah.
as it always is. But with rising interest rates, there's really nothing we can do about that. The only really solution there is to keep the debt down. Well, that's one of the ways to do that is not go out and buy that real expensive
Right.
car from the get-go.
Right. And I know that can be really challenging. I know I have myself had this where somebody's getting ready to get this house. It's their first house. They're so excited. And they go out and start ordering a bunch of furniture
That's funny.
before they get the house.
That is so funny, and that was actually number two for me.
Okay, good.
Was hey, once we get you under contract, and I tell all my clients this: literally, do not apply for anything.
Yes.
Whatever you're going to need, you can get it the day after closing.
Right.
You don't have to go to Home Depot and get that washer and dryer same day, 12 by
Right.
same days cash.
Right.
You can get it the day after you close
Yeah.
on the house.
And they get excited. They really do get excited. So I think these are always really important key factors so they know, because I have seen it, I'm sure you have seen it, where you think you're just trucking along and at the end of that loan, that credit is pulled again and there it is and it's like dead.
They do. The lenders, they're smart. They literally, from the time a application is submitted, they will track your inquiries. And you can be in a situation where you just literally apply for a Capital One credit card, for example, and that afternoon I will know about it and I'll reach out to my client and say, hey, what's going on with this? Oh, we just wanted to apply for it. We weren't going to put anything on it. Okay, no problem. That's fine. Just don't put
Yeah.
anything on it, because if you do, we'll have to
So
we'll have to
that
investigate
that's just, I've got another question about that. So what if they're applying, because I think what you just said is they apply, so they've got an inquiry on
Yes.
their credit, so that would not affect them necessarily.
Correct.
Okay.
The inquiry's no problem.
Okay.
The problem is because there's normally a document they have to complete that the underwriter will ask for, and what they do is they'll look at all the recent inquiries.
Yeah.
Because sometimes someone can apply for a credit card in March, and then if we pull the credit in June, well, who knows what happened between March and June?
Right.
Well, they could have gotten the credit card, not used it yet, but then all of a sudden decided to use it, and then now all of a sudden, boom, we've got
it's
it.
changed.
So on that document, it's listed, have you established new credit from this inquiry? Yes or no? If they click yes, then that will trigger the underwriter to ask for, the documentation.
Right.
Updated statement, whatever
Those
that might be.
triggers.
Yes, exactly.
Those triggers.
Exactly.
Gotta love those triggers.
So Carrie, the next one is an obvious one.
Okay.
But I have to say it.
Okay.
When you're buying a house, don't quit your job. Try not to quit your job, please. I cannot tell you how many times, I can count them on two hands,
Yeah.
to where we literally are days from closing. And one of the last things the lender will do before they release the money to the closing attorney
Right.
is they'll get on the phone or they'll do an automated verification of employment.
Right.
And I can't tell you how many times that, well, Joey doesn't work here anymore. And then all of a sudden, so I'm talking to Joey. Joey, what happened? Well, I went ahead and gave my notice and then I started my new job. Yeah, if you can, if you think you're going to switch jobs, go ahead and do that, and then let's look at going ahead and getting the
Okay.
house. You only have to show a 2-year work history.
Right.
It doesn't have to be at the same place. It doesn't have to be even be in the same field.
Right.
As long as you're W-2'd here and you were W-2'd there,
Right.
that's no problem. We just have to put it on the application.
Right, that
But
it's there.
yes, ma'am. But
Okay.
boy, you do not want to switch, especially when we're right in the middle of the process.
Okay, and again, you've just prompted another question. So, let's just say this scenario, I'm a nurse, and I'm going to leave hospital A and I'm going to go be a nurse at hospital B, because it's a lateral move, does that still affect you, or is that still considered an interrupt in your employment history?
It's not at all. That is
Okay.
that is no problem. That's actually the easiest part
Okay.
of this. Yeah, if you're going to be a nurse here and I'm going to be a nurse there,
Right.
that's real simple. What we would do in that case is let's go ahead and get a copy of the offer letter, and let's find out when your start date is, and then as long as we can produce one paycheck, then we're good.
We're good.
We're
Okay.
good to go.
So I think that's important for people to know, that you can't be a nurse and then be a cake baker, but you can be a nurse and continue to be a nurse, because those kind of transitions happen and they could have been in the works prior to. So
Right.
that's a good distinction to make. Okay, what's next?
So, well, actually, ties in what we
Okay.
just talked about. So, one of the things that you do not want to do is you do not, if you're thinking about starting your own business, buy the house first. Unfortunately, how should I
Harder
say
for
this?
entrepreneurs.
It is. It is.
Yes.
It's stacked up against us,
Yeah.
unfortunately.
Yeah.
I mean, I own my own business.
Yeah.
In essence, you run your own
Yes,
business,
absolutely.
and it is stacked against us. It
Right.
is so difficult. If I start a company today, I have to wait 2 tax returns before I can even consider getting a home mortgage.
Right.
So hey, I'm all about owning your own company.
Yeah.
But if you think you're going to do it and it's down the road, go ahead and get into a house first.
Right.
And then you can start doing that.
Yes.
And then again, once you've been in that business for 2 years and you're showing enough income, then no problem if you want to upgrade
Right.
and buy a bigger house or anything like that.
That happened to a client of mine just like a year and a half ago. He left a long-term career, started his own business, decided they wanted a bigger house, and that's exactly what he was faced with, that 2 years of employment history. Even though this guy was solid in every way, shape, or form, that's really important for people to know, that if you're going to start your own business, which I agree with you, go for it. Get your house first.
Yeah, definitely. And one way that people are trying to circumvent this rule
Yeah.
is they'll be business for self, and then they'll get a W-2 job because they've heard this before.
Right,
Oh,
okay.
well, I'm going to go ahead and get a W-2 job, but I'm still going to do my business on the side.
Right.
Well, again, lenders are smart. They will only allow you to use one of those sources. So I have a perfect example
Okay.
here. This happened just about 4 months ago or so. So I have a lady that I've pre-approved, and she has a great little sideline business, but she went through a divorce and then she had to go get a W-2 job.
Okay.
Well, the good news is the W-2 job she got was a good job,
Right,
but she was hoping to use both incomes.
right.
Unfortunately, the lender will only let you use one, and of
Okay.
course, the W-2 is the easier. It was the more. So that's what we went through. But she was disappointed because she was
Right.
like, "Well, no, I'm generating X amount of dollars for my
Right.
company, and I'm doing this."
Yeah,
for
because
this."
on your tax return, you have to claim both. So I can understand. I would have thought both could have been
Yeah.
used as proof of income. And also, that would help balance your debt to income ratio, maybe.
Very
right?
much so. Very much
Okay.
so. So unfortunately, this young lady's run into a situation where she can afford more than we can prove.
Okay, got you, yeah.
But unfortunately, what we can prove is what she's going to be proved off of, which in this market, it's a little selective for
Right.
her. She's going to have to just kind of wait and
Yeah.
hopefully, if things
Something
drop or
will
whatever,
come.
something will come up.
Yeah. Okay, so that's number 3. What's number 4?
Oh boy, that's a good one. I guess number 4 could simply be listen to your loan officer, listen to your realtor. We are the experts.
Yeah.
Don't, this is where we go back to things that you don't do. Don't think that because you saw something online that, oh, we can do this. If your realtor is telling you something about a particular home or about something within that his or her expertise, listen to that person.
Right.
If a loan officer is telling you something that pertains to it, listen to us. Just because your buddy got something or was able to do something doesn't
Aunt
necessarily
Joe or
mean
whatever.
we can do it. Yeah.
Right.
And again, the good news is a lot of things can be corrected and can be documented. One thing the lenders do really well is they'll allow letters of explanation. So if there's something weird out there, oh, well, I was told to, I'll give you a great example. I had a lady that was trying to improve her credit scores. So she went with one of these credit repair places.
Right.
And the first thing the credit repair place does, they tell them, say, quit paying all your bills. Wait until we'll let all your bills go into collections, and then we'll negotiate with the collectors,
yeah.
and we'll save you a bunch of money.
Yeah.
Well,
And they do, but
well, exactly.
do that.
Anybody can do that because the reality is this: if you don't pay a Capital One account, Capital One wants all their money until they're tired of messing with you.
Right.
Then they'll charge it off, which may sound like a good term, but it's not.
It's not.
And then that gets bought from a collector for 10 cents to the dollar
Right.
usually. Well, then of course, then the collector will take 50% of
Right.
that because they're going to make 40%.
Yep.
But the bad part about it is, guess what? Your credit score is going in the tank.
Yep.
And then ultimately you end up having to still pay those debts anyway.
Yeah.
And sometimes it's a long journey to get back to, a reasonable credit score
Yeah.
to have multiple
It's
loan
much
programs.
easier for it to fall than it is for it to get
Yes,
back up.
indeed.
So that's always something to remember. So are those our don't do's? Are those the most important
Those would
don't-dos?
definitely be the four
Okay.
that I tell all of my clients,
Okay.
especially the first time home buyers.
Okay, because it's really important. These are all things, I think even for people who have bought a home before, these are still good tips to listen to because really it applies across the board. But our first time home buyers are always the one that are a little less educated, and that's what we're trying to do here.
Very much so. And if I were to add a number 5,
Okay.
this isn't really a don't or do. This would be if you're with somebody and if you're buying a house together, make sure one of you runs the money. Make sure one of you sets the budgets. There are times when I can pull credit on a married couple, for example, and things aren't great. And so I start asking questions, okay, so-and-so, who's handling the bills?
Right.
Well, he sometimes pays them and then sometimes I pay them. So when I start hearing that, I urge them for one of those persons to own that. Own the budget, own the paying of the bills.
Right.
That way it streamlines things. The responsibility, it's both persons' responsibility, obviously, but it does help that one person to focus on it to make sure things aren't slipping through the cracks. A lot of folks in today's world sometimes will just keep their finances separate. Again, no problem with that. If that works, that's great.
Yeah.
But sometimes one person may not be great at that, but the other person might be.
Yeah.
So this way it kind of just, get the person that really wants to do it, that really can focus on it, and have them focus on not only saving money, but making sure bills are paid on time and that you're achieving your financial goals.
That's a very good tip. So everybody, we have just gone through some of the don't do's, things that you don't want to do when you're trying to get a mortgage, and those can be equally as important as the things that you do need to do. So Keith, thank you for sharing this
Thank
with
you,
us,
Carrie
and
Ann.
hopefully this is going to be a really good, helpful video for people who are thinking about getting into the housing market, and hopefully this is just going to be really good.
Outstanding. Thank you, Carrie Ann, for having me.
Thank you so much. So everybody, again, this is Carrie Ann. I'm your favorite local go-to realtor here in Northeast Florida. And as always, I hope to see you around town. Bye.
Bye-bye.